What's up guys, my name is Andrew and today I'm discussing Workhorse, the electric vehicle company. In this video, I'm going to cover several things that may pique the overall interest of you as an investor or if you're thinking about being a potential investor of the company. Today, I'm going to cover the current stock price and whether or not if it's a good buy-in price for the company at its current moment. I'm going to talk about a new delivery option that they're working with and potentially finalizing with a major international company. I'll give you a hint, it's not FedEx or DHL, and what the overall future looks like for the company moving past 2021. However, before we get started, please do the channel a favor. Go ahead and hit that like and or subscribe button, and really helps the channel grow, and hopefully we can grow faster than Workhorse. So let's go ahead and jump right into it and talk about the stock price. The stock price right now is trading around $13.50 a share at the time of this video, which, as you know, is a massive drop when the news come out earlier in the year about them losing the United States Postal Service contract. The good news for me is when I look at this, I think it's a very good, down-to-earth, reasonable stock price for the company in its current state. 2020 was the year that really seemed to hype up all kind of electric vehicle stocks, from Tesla to NIO to Workhorse to Lordstown Motors Group. The list goes on, and it really pushed these companies' valuations and stock price to unreasonable limits. Things, if you look at the basic financials of how companies are evaluated and they come up with a good, fair stock price, it blew those analysts out of the water because of all the hype, where people were just excited about these companies and kind of tend to look away from the basics of the financials that they had. So when I look at Workhorse in its current state, we're approaching the second month since they got the bad news about the Postal Service contract. And to me, the stock has kind of leveled off with really no major swings in either direction. So since it's kind of leveled off, we start looking at what a realistic goal or target price is. And I started looking at several different financial websites and kind of got a general consensus of what the analysts are saying. When you compare what the financial sites are forecasting with the current stock price, since it's trading well under what the general analysis are projecting, we start looking at what is a high and what is a low. And right now, the general consensus is a high, it could be around the mid-20s to a low of around $11 a share. So when these analysts are looking at the company and kind of getting a new target price, hey, there's high or low, they're really reviewing and coming up based off three factors: the past, the present, and the future. Really more on the present and the future. Yes, the past kind of grooms and lays the foundation of what the company can do. So now we look at the present, what are they doing currently, and what are they going to do in the near future, in the long term. And here's what I mean. Even without the post office contract, Workhorse has been quietly receiving and fulfilling orders with other companies that have bought their product. They increased their backlog to now over 8,000 vehicles and raised an additional $270 million in financing, and their investment with Lordstown Motors is now valued at $326 million because they own a 10% stake in the company, which becomes liquid sometime in April. Overall, they ended 2020 with a net income of over $280 million. Compare that to $655,000 in 2019. Now, of course, that's the past and some of the present of the company. So now let's change gears and look towards the future and what the overall outlook looks like for the company moving past 2021, say in the next 5 years or so. Now, here's one of the things that has really piqued my interest about the company. Workhorse, in my opinion, has realized they have to be diversified. They can't just not produce electric vehicles and think that's going to make them successful and become a billion-dollar company. They've looked at multiple ways dealing with innovation and what the need is in the future. And one of those is drone delivery systems. Workhorse for the past couple of years has been working with a program they call Horsefly, which they've partnered up with UPS and really experimenting with how successful drone deliveries can be in today's age with electric vehicles, with demand packages, UPS, Amazon, the list goes on and on. And I kind of show you a video really showcasing what they can do in the future. Recently, they shared this video demonstrating the experiment with UPS and how efficient the system can be. In short, this is kind of how it works. The driver can upload a package to the drone, put the address in, the package then self-drives it over to that location, the house, the business, drops the package off, while at the same time the driver is continuing to deliver packages on the route. Once the drone is finished, the drone flies back to the truck, resets, and they can upload another package and go about their day. The cool thing about this is while yes, it's still an experiment and work in progress, UPS has come out and said that a reduction of just 1 mile per driver per day over 1 year can save UPS up to around $50 million. This is huge in multiple ways. First reason is UPS is one of the largest international delivery companies in the entire world. UPS made over $84 billion in 2020 alone. So the ability to save $50 million a year just off one driver could be a massive cost reduction to the company. Now, personally, when I look at this, I think companies like UPS and even Amazon will either license this technology from Workhorse or try to buy them out just outright. Now, the last product I'm going to cover is their Metron Analytics program. This comes with every vehicle they sell. So whether you buy one vehicle or 1,000 vehicles, you get this program embedded with that purchase. And this really can dramatically change the way how vehicle fleets are managed moving forward. So the Metron technology is app-based or it could be something on your computer. It provides an interactive map, which you're able to view your trucks in real time. The next option is it optimizes delivery routes. This allows you to set up your delivery routes based on road conditions, congestion, traffic, timing, the list goes on and on, which falls into the next category. It allows you to be more efficient, it allows you to save time, energy, and really get your products to your customers in a faster time. Also saves GPS data to the cloud, so you can use it to view or run reports at a later time. And also, since we're talking about electric vehicles, it gives you updates on the last charge or how much battery capacity you still have within the vehicle. And it also tracks the number of stops. So while this isn't a game-changing technology, a lot of companies have this. This is just another way for Workhorse to attract customers because they almost get that customer service support embedded with that initial purchase of the vehicle. Now, the last bit of nugget of information I'm going to share is my personal opinion and is 100% pure speculation, so do not take this to the bank. If you look at Workhorse, they were obviously a final contender for that lucrative $8 billion contract with the Postal Service. Of course, they didn't get it. But the good news is, if a smaller company was in the running for that lucrative contract, they've obviously increased and are continuing to build their company. They could easily be in contention for other major federal and state vehicle contracts in the future when we're talking about the all-electric option. So this isn't the end of the road for the company. Obviously, this was been a huge boost in them, and a lot of us would have been got filthy rich depending on how many shares we have with Workhorse. But it still looks promising for them in the future because there's always going to be contracts coming available for the government. Of course, I'm not your professional financial advisor, so please don't take this to the bank. This is just my personal opinion. Do your own research or reach out to your financial advisor if you have further questions. All I'm saying is, if you're looking to invest in Workhorse, this is a long-term play and it could be successful moving forward in the next 5 to 10 years. But more importantly, if you're one of those people that bought in, say $20, $25 a share, thinking they were going to get this contract, and obviously it dropped to these $13.50 a share, and you're stuck with whether it's one share or 1,000 shares. If you're patient, I think this company will rebound slowly. I think they have a lot of potential, and I think they have a good outlook for them moving forward. So don't panic. Obviously, everyone has different strategies. That's just my personal strategy. I own 200 shares of Workhorse, so it's not like I lost a lot of money, but I'm willing to be patient and give them another 6 months to a year to kind of see how they develop and move forward as a company in a whole. And before you leave, don't forget to check out the free links in the description box below, things I use almost every day. And also, Adam has our Discord up and running, completely free. You know, we're not asking for your money for a Patreon account. It's just our thoughts and opinions of what we think and our subscribers as well. Completely free. Just check out the link. Thanks for watching, guys. I hope your stocks turn greener and greener every day. I hope you stay safe. Hope you have a great summer, and we'll see you on the next one. Later.